Hello investors, my name is Dehan and welcome back to your number one place for all your investing needs. In today's video, we're going to be taking a look at the top 5 reopening of the economy stocks. So as the NASDAQ has been pulling down the tech sector, a lot of these reopening stocks have already started to boom and they're going to continue to boom throughout 2021 as long as this vaccine is working and as long as everything else starts to reopen, right? So we're going to be continuing to look at these stocks. So let's dive on in and check them on out, guys. First reopening stock on our list is going to be ticker symbol XOM, which is going to be ExxonMobil Corporation, currently trading at around $60.93. It was up about 3.78% on Friday at the close. So what's going on with this one? Obviously, this is going to be the oil and gas company. So with the reopening of the economy, a lot of places are starting to reopen, which means that they need, trucks, ships, different things going on right now that are going to be transporting airplanes, and they need gas and oil, obviously, because of this. So the reopening of the economy is going to cause a lot of traffic to start coming up. A lot of things are going to be moving around, and that is why we're going to be looking at this play. If we take a look just here at the 5 days, the stock is already about $4, a little bit over $4 in the past 5 days. If we take a look in the 1 month chart, it was trading at around $52 per share. Now it's at about $61. So another $9 raise right there of about 20% or so. So it's continuing to rise on higher and higher. The last 6 months, it's continued to, boom on higher and higher as well. And then obviously in the past year, if we take a look, when the Rona started, it dipped down here to about $32, pulled on up, then it came back down throughout, September, October, November, and then we went from $32 all the way to $61 in the past 3 or 4 months or so. So this one is going to be on the rise. And now there's obviously different plays. You have ExxonMobil, we have Chevron, we have OXY, we have a couple different companies that you could add on this list. I picked ExxonMobil because it actually has a dividend as well. So they have a dividend yield of 5.71%, which is beautiful for anybody who's a dividend investor as well as a growth investor. So this one could be a growth play and a dividend play for the long term if you're into that, and that's something for you guys to check out, obviously. So with this one, I think that we're going to give this one a price target of about $75 per share for 2021. So in the next year or so, I think that this one could definitely go up another $10 to $15 per share, and that's going to be my personal price target for ExxonMobil as we start to reopen up the economy, like I said, and as things start to move on up. We're going to have to use, more and more gas and oil, which means that ExxonMobil is going to benefit from that, and so will Chevron and all these other, oil and gas companies. Now, guys, let me know in the comments below, what stocks are you looking at right now with the reopening of the economy? And as always, go ahead and smash that like button, support the channel. Let's get 100 plus likes on this video in the first 24 hours of it being up. Also, go ahead and subscribe to the channel and turn on that bell notification so you get notified every time we make a new video. If you guys want to sign up for Webull and get 2 free stocks valued at up to $1,800. Links are going to be in the description as well. The second stock to buy on our list is going to be ticker symbol LB, which is going to be L Brands. So this one, with the reopening of the economy, is definitely going to be a hot one. Even with the economy being closed, it was a hot one as well, and I'll show you guys exactly why. So this one was up about 3% on Friday, currently trading at $55.68. This one does not have a dividend yield at all. Market cap at $15.48 billion right now. As we can see in the past, 5 days, it's been kind of staying at that same price. It's went up and down, but if we look at the 1 month chart, it went from about $50 all the way to $55, and then on the 6 month chart, all the way from lows of about $28 all the way up here. So about 100% gain since September. And then if we look at the 1 year chart, it's went from $9 all the way up here. Those are some massive gains. 600, 700% gains. And let's take a look at why. So right here, the company's most recent earnings report on November 18th caused the stock to jump 18% in 1 day. L Brand's revenue in the third quarter rose 14% year over year, with a huge 28% increase in comparable store sales. Adjusted earnings came in at $1.13 per share, which is up from 2 cents a year ago. The biggest boost came from increased demand from soap and hand sanitizer during the pandemic. That is the key right there, guys. Bath and Body Works. So Bath and Body Works sells soaps and hand sanitizers, and that benefited the company even during the Rona. So now they're going to have to keep away, make sure that the momentum stays even after, the Rona stops or, we start to reopen up. How can they continue that momentum with Bath and Body Works, after the pandemic? That's something they're going to have to take a look at, but they will have Victoria's Secret, coming up and starting to boom, hopefully. So that's kind of going to even it out, I guess you could say. Victoria's Secret is going to start booming. Bath and Body Works might start, to trend on down a little bit because the people are going to be, using less caution, I guess you could say. Or you never know, maybe you will use even more caution and, continue to buy this stuff. So definitely L Brands is a very hot one to be looking at, guys, because of this. situation right here. Now, if we take a look here by analyst picks, we have 21 analysts offering a 12-month price target. The low price target is $47, median is $60, and the high is $77. I think that we're going to blow this out of the water and continue to even go higher than that. But this is what these analysts said. So we have 10 buy ratings, 14 hold ratings by these analysts. I personally think that this stock could be a $70 plus stock by the end of 2021. I think it has a lot more potential, and I think that people are going to continue to buy these hand sanitizers and different products from Bath and Body Works, and also Victoria's Secret is going to start to boom as the economy is going to start opening up again. So I think that this one could easily reach $70 per share by the end of 2021. Let me know in the comments below. Do you guys agree or disagree with my comment? The third reopening of the economy stock is going to be Southwest Airlines, ticker symbol LUV. We need some love, right? So with this one, let's take a look. It was up about 1.5% on Friday, trading at $56.92. If we take a look down here, obviously, it was actually down to about $52 per share. Great buying opportunity on that dip, and then the stock continued to trend on up. Now, obviously, the market is a little bit sketchy. It's kind of going up and down very quickly. We don't know what's going to happen next week, but I'm going to be expecting for the sell-off to continue to happen in the tech sector, obviously, but I think that these reopening of the economy stocks are going to continue to boom. Now, with this one, no dividend as of currently right now, so market cap $33.6 billion. Once again, so Southwest Airlines and all the other airlines, American Airlines, whatever airline you're looking at, is going to start to benefit because reopening of the economy. So a lot of people have not been traveling. They've not been taking that vacation they've been wanting to do. So they've been saving up money maybe and, postponing it. And now when the economy opens back up, we're going to be seeing, these airline flights being booked up, quickly. And people are going to be on these flights going on vacation, traveling, doing different things with their, wives and husbands and families and, whoever. And I think that these companies are going to be benefiting very, very greatly in the next year to actually 3-5 years in the future because of this. So this one is definitely a hot one to keep on your radar as we're going to be reopening, which obviously means these companies are going to be using, gas and oil, which means that they're going to be, their prices are going to start to rise up a little bit, and, money's going to have to be used, and that's where it goes back to ExxonMobil. ExxonMobil is going to benefit from this. Southwest Airlines is going to benefit from this, and so are these other companies. It's all connected. All of these companies are connected, and you'll see in the number 4 and the number 5 pick in our video, you're going to see how they benefit from all of these as well. They're all interacting together, I guess you could say, because one thing happens, all these other, it's like a domino effect, I guess you could say. One domino falls and all the dominoes fall right after it. So that's pretty much what I'm saying right here. So this one, 20 analysts have a 12-month price target. Low is $44, median is $58, and then the high is $71 per share. I think that this one is definitely going to destroy that. I think it's going to go way above $70 per share, but I'll personally give it a $70 per share price target, and we'll see. I think it's going to blow that through the waters in 2021 and continue to go higher and higher. All of these reopening plays are going to be booming and hot for the rest of the year, and especially since I don't even think that many people are even on these plays yet. I think the big institutions and the big players are on these, but the newer investors and people like me and you, some of us haven't even gotten in on these plays right now. And just imagine once all the robinhooders come in and they start buying these things up, it's going to continue to rise on up higher and higher. The number 4th reopening stock is going to be Wynn Resorts, ticker symbol WYNN. So this one right here, another hot play, guys, another hot play. And just like I said, they all interact with each other, or they correlate. It's because people are going to be going to these resorts, right? They're going to be going to Las Vegas. They're going to be doing, gambling, casinos, different things like that. And they're going to have to travel to get there. And then the reopening of the economy is going to be benefiting from that, just like ExxonMobil, just like the airlines, and just like Wynn Resorts. So let's take a look right here, guys. This one, 15.4 billion market cap. It's not that big of a market cap actually for a company like this. If we take a look for the last 5 days, it's been going up, up and down. Past month, it's went up from about $1.14, so about $19-20 per share higher. And then in the past 6 months, it's boomed even higher from about $83 to $133. And then in the past year, it's definitely, made a jump from $48 to $133. I mean, that's about almost 150-200% gains. So anybody that bought at those March lows when we had that market crash is definitely benefiting right now as the stock is continuing to trend on higher. And I think it's going to go even higher and higher than this. I think that Wynn Resorts is easily going to top off $150+ per share by the end of 2021. I think it could even go higher than that, but I'm going to be on the safe side and say $150 per share, which gives it about a $17 increase, which is not that bad if you think about it. That's still about a 10 to 15% gain on this stock for the rest of the year. And as the market is only giving back 7 to 10% average in the past 100 years, I think that 10 to 15% is a decent play on a company like Wynn Resorts. And with the, like I said, with the reopening of the economy, all of these companies are going to be benefiting. Now we're just going to have to see which companies are going to be benefiting more than others, because obviously some of them are going to be benefiting a lot more than other companies. And I think some of the biggest plays are definitely going to be the oil sector, because there's just going to be so much traveling going on, and I hope you guys can understand that, and I hope you guys agree. Actually, let me know in the comments below. Do you agree or disagree with my comments on that? I think that we're going to be using a lot more oil and gas, so I think that those companies are going to be benefiting the most. But so will other ones, because travel is going to be a huge thing as well, and that means more money in these companies' pockets, which means more revenue, and the stock should go up, right? And last but not least, we left the best one for last. Number 5 on our list is going to be the Walt Disney Company, ticker symbol DIS. This one is trading at around $189.99. It was up about 1% on Friday. It did, come back down here with the market to 183, and then the market came back up. So this one currently paused dividend, as we see. Market cap $344.8 billion. This is a huge company. Now, a lot of you guys, made plays on this when Disney Plus came out, a year or two ago when that all started. And, that stock was pretty cheap, wasn't it? It was under $100 per share. So if you would have bought at those lows right now, you would be up over 100%. But let's take a look at what Disney has been doing in the past month or so. So it's been trading sideways for about a month, but if we take a look here in the 6-month chart, went from 134 to 190, so that's about a $55-$60 rise. If we take a look at the 1 year, at the lows when the pandemic started, it was under $80. It shows $85, but it was a little bit lower. I believe it was around $80 per share, maybe even $79 per share. So if you would have bought in those lows in March, you would have made over 100% gain so far on Disney, because obviously Disney is going to be back. Everybody thought that it was going to be the end of the world, that all these parks would be closed and everything would be closed, that the market would not recover for years and years, but they were wrong. I mean, it only took a year. We just hit, the 1-year anniversary since the pandemic hit, and these stocks are already booming. They're already back at their all-time highs, higher than they were when before the pandemic. So before the pandemic, it was trading at $150 to $120 per share. So right now it's $70 plus higher than it was when the pandemic started. So the pandemic pretty much gave you a discounted rate. You could have bought it on the dip. It was like a Black Friday sale. A lot of people are saying, oh, the coronavirus was bad and all this, but there was great opportunities for investors to get in on cheap stock prices and benefit from it long term. If you're a long-term holder, you definitely want it to a crash. You always want a crash. Like right now, we see the tech sector is pulling back, and that is something we've been waiting for, right? So why would you panic and sell all your stocks if you've been waiting for cheaper prices? If you believe in your company and none of the fundamentals have changed, during the past few weeks of the company outlook, then why would you sell your stock? You should be buying more if you have cash on hand, and you should always have cash on hand. You should have about 10 to 25% cash in your bank ready to load the dips. Obviously, if you think the market is overbought, you should not be loading up anything. But when you see crashes like this and pullback corrections, I guess you could say, that's when you should be unloading that cash, unloading more and more, buying every single day, little bit by little bit. Let's say you had 10 grand in your bank account and you're ready to buy in. I would split it up, $500 or $1,000 every single day. Split it on out. If the market's red, buy like $1,000 worth. If the market's green, buy about $500 worth. That way you spread it on out, and you're averaging in instead of just throwing it all at once, because you don't know when the dip is going to end. So the stock could continue to pull back. But that's something you guys as investors have to learn and do yourself. Obviously, I'm not a financial advisor, so you need to speak to your financial advisor before investing into any of these stocks, obviously. But if you guys are interested in that type of stuff, speak to your financial advisor, because this is just for educational purposes. Like usual, I'm just showing you guys 5 stocks that I think are going to continue to boom because of the reopening of the economy, and I think that they have a great future for 2021 and even 2022 as we continue to open up. We're gonna be seeing some great impacts from these companies and how the reopening is going to benefit everybody in one way or another, right? So let me know in the comments below, guys, what stocks are you going to be buying right now? Are you buying any of these that are on this list? If we take a look for Disney right here, for the 25 analysts offering a 12-month price forecast, the low is 124, median is 215, and then the high is 230. So they're predicting it's going to be around $200 per share. I'm going to give Disney a price target for myself from $215, maybe $220 per share for 2021, which still gives it an upside of about $25 to $30 per share, which is about 10% or so. I think it's going to be benefiting greatly as the parks open up. We have 20 analysts saying buy and 1 outperform, 7 hold right there, and then 1 outperform down there. So I think that Disney is going to do great. You guys let me know in the comments below. What do you guys think about all 5 of these picks? Which picks do you think are great buys? Which do you think is not? Are any of them in your portfolio, or have you been loading up on any stocks in general on these dips and the reopening hype right now that's going on? And as always, guys, smash that like button. Let's get 100 plus likes on this video. Subscribe to the channel. Turn on that bell notification for more content like this. And as always, if you guys want to sign up for Webull, get your 2 free stocks when you sign up today. Links are going to be in the description. I hope you guys enjoyed, and I hope to see you guys in the next one. Goodbye.